Hello again. The Colombo bourse is very much a hot topic these days. In January, it recorded the steepest fall yet, with the loss of some 44 billion rupees or 2% in a single day's trading. So, will this volatile state of affairs continue? And what factors contribute to this kind of selling pressure? We caught up with the Managing Director and Group CEO of Acuity Partners, Ray Abhivardhana, to get his views on these issues. Thank you for coming in to talk to us on Benchmark, Ray. You can't be too happy with what's been going on and off the floor these days. How do you see things?
First and foremost, thank you for inviting me over. I see the market going through a steep correction. My thinking is that the market over-exhausted itself, and what we are seeing now, we saw about a year ago where the market was trading at about 25, 27 times earnings, but it has shed since, trades around 14 times earnings as of now. The volatility continues, and we see turnovers also having receded fairly significantly, and we see about 2-3 days short-term gains being wiped off in a day. So overall, it's a bit of a topsy-turvy market that we are experiencing right now.
So the Colombo bourse has been seeing some gut-wrenching days from the start of the new year. For instance, the 23rd of January saw it shed 44 billion rupees or 2% wiped out in a single day. Probably one of the steepest falls in history. Do you expect this level of volatility to continue, do you think?
As for the market per se, Savitri, the market has been declining, I think, since August of last year. It peaked in February of last year at 7,800 levels, and August the market, the next peak was at 7,050. So between February and August the market declined nearly 750 points, but the turnovers were heavy and there was a lot of volumes and trading, and the market, there were money making opportunities in the market. But what we've seen is since August of last year that the market has been on a fairly steep decline. Overall market capitalization, which was at about 2.5 trillion, has shed to 2 trillion. So you see a steep decline there. As I said, market P's also have come down, and turnover levels also have declined. As for your question on the volatility, yes, I think on the short term the market will remain volatile, but hopefully we may not see the 23rd of Jan, the date that you mentioned, is fairly conspicuous because the market declined about 225 points at one time and then sort of gained a bit of momentum and closed 120 points down. And you're correct, it lost about 2% or 44 billion in value that day. But hopefully we will not see as significant declines on one day losses of that nature, but overall the market does continue to be volatile.
Now, ironically, in this scenario, many analysts and stockbrokers are actually saying that this is the best time to buy into the domestic equities market and pointing in the direction of blue chips like JKH, for instance, and of course because of the blue chip strong fundamentals, and also towards the banking sector. What is your advice?
Personally, I think, Savitri, it's a good time to buy for the discerning investor, one who has the holding power, one who also is looking at the long term. That's why we see fund managers moving into markets who have funds, who have who control who have fairly significant funds under management, moving at times like this because it's a buyer's market, and one you can phase out your buying. You don't need to buy all your stocks in one day, so that you eventually average out. One never knows when you hit the bottom. So there are some very good fundamentally strong stocks trading at good value. There is also good stocks with good growth potential who are trading at fairly good values as we see today. So selectively, yes, I think there is. This probably is not a market for the short-term investor or the punter, as one would call them, who would go on borrowed funds. So I think for the long-term investor, it's a good time to get in.
I know the Colombo bourse has been around for a long time, but when you look at the actual flavor of the market, are we a mature market?
We have been around for a long time, Savitri, that is correct. But I think you will always, when the history of our market is being written, there will always be a pre-May 2009 and a post. I mean, as Sri Lanka would redefine itself when once history is written. So I think we did have a market. We have had a market in existence for much longer. The infrastructure was excellent. We have had good central depositories. We had a automated trading system way before most of some of the other emerging markets had. So in that sense, the infrastructure, the regulatory framework has been good. But we never had. Still, the market is not large enough for volumes, the liquidity. So there are still constraints. So when I say discerning, what I mean is that, I mean, you do get the short-term investor, but overall, if you take a holistic view, I think more or less people are mature in the same. Market probably has not, and I guess there's a lot more that needs to be done to make this market grow. I think you need to increase in size first and foremost.
The LMD 50 special edition, which was released recently, says that Sri Lanka's leading listed companies are, quote, riding high, unquote, but they may soon be at crossroads because of events here and abroad. And in short, the numbers thus far at peacetime have been encouraging, but whether this is sustainable is another story. Your take on this?
There again, as I said, you look at the market from a end of the war and the post-war period. Post-war, coming off a low base, the gains would be significant. So you probably come off a low base and have good, strong growth in a year or two thereafter. But what we have seen is that momentum has been continuing. Companies are continuing to, especially in the banking sector and the others, the results have been very encouraging and very good. So the results have not been any this. Of course, there will be consolidation, Savitri, at one point. The other factor is that, I mean, we are coming off a 30-year war, which affected us in all aspects. I think it's time. I mean, as a nation, we should all think positively, think alike. I mean, this notion that we have, most of us, I guess you and I and others have attended these management, these HR things, where we are told that we need to think positively, believe in something, stay focused, and we can achieve it. So I think it's time now as a country we look at, where we look at collectively taking Sri Lanka from where we are. If we are looking at developing ourselves and have those same objectives, I think as a country we should. I'm sure places like Singapore and Malaysia, where they were 30, 40 years ago, they probably also, I mean, collectively. So we need to rally or support the policymakers, of course, within realistic and achievable or attainable goals. And as a country, we should believe that we should be able to sing. I mean, that's my thinking on that point.
We take a quick break now. On the other side, Ray Abeyewardene elaborates on how interest rates affect investors, equities post-budget analysis, and the hotly debated issues of market manipulation and insider trading.